So any premium that has been paid other than your uh, any other thing that is paid apart from, so other than by cash is available as deduction. So it should not be paid by cash, then it will not be available. So that's more. Then bonus and commission to employees, 36.2. So this year again bonus and commission is again allowed as expenditure, provided two reasons are there. One is it should not be any such sum that could have been payable to him on profits or dividends if it had not been paid as bonus. That is number one. That means you should not garb profits or dividends in the form of bonus and commission. So somebody is, you know, supposed to be paid dividend or commission or profits should not be paid in the form of bonus and commission. That is number one. Number two, if you make a provision for it, you're not paid it. If you make a provision for it, it should have been paid before the filing of the return by the next year. That means if you have provided as on March 31st, 2020, it is payable. You are making an entry bonus account debit to bonus payable. Then it will be available as deduction for that financial year only if it is paid before the due date of filing the return. We'll come to 43B again and again. We'll come to that. So there are two conditions basically for bonus. One is that it should not be profits and dividends in the garb of bonus and commission. It should be genuine bonus and commission to employees. Then it will be allowed, and it will be allowed on payment basis. Now the next most important thing is interest on borrowed capital, 36.3. Now, amount of interest paid in respect of capital borrowed for the purpose of business or profession is allowed as deduction. For claiming deduction, basic requirement, the money must have been borrowed by the assessee. Must have been borrowed for the business or profession or vocation. Assessee must have paid interest on the amount claimed it as deduction. So, if you remember, if it's a house property that is being used for business, even that interest can be claimed as interest here. So even if it's a loan taken for construction of property which is occupied by the for business purpose, even there that can be claimed here. Paid means actually paid or due, depending on the method of accounting. So this is not controlled by 43B. Even if it is due, we can still claim it. It is not necessary that the investment made out of borrowed funds should yield any profit in the year. So that means the department cannot say, the government cannot say that you have taken the loan and you have invested in something, but there is no result or profit from that investment. Therefore, I will not give you the interest for which you have used that money. That is not required. So that means if you take loan, you can take it as interest as deductible, even though you may not make use of or make any profit out of the investment. You borrowed loan and invested in something, and there is no profit in that. Even then, this interest will be deductible. That is the famous case of Calico type. Interest paid by a firm to its partner is allowable as deduction, subject to maximum of 12%. We have already discussed this earlier at the time of the charge section of section 28. We have discussed interest on money borrowed for the period prior to commencement of business is not allowed under this section, but can be treated as part of cost of asset acquired. Similarly, sugar versus CIP. Again, there is also landmark judgment where till that when only and only when the asset is being used or put to use for business, from that moment only you can claim deduction. Anything prior to that should be capitalized. Anything prior to that, anything means interest prior to that should be capitalized. Like if you look at the house property, what did we do? We accumulated the 1/5. Accumulated the interest prior to the previous year in which construction got completed, and then took 1/5. Here that is not allowed. Here till the date of completion. It is not the end of the previous year prior to the year in which it is completed. It is till the date of completion. Only after on that date, after completion, you can charge it to your P&L. Till that time, whatever is interest has to be accumulated and taken as part of your capital asset. That means whatever is the machinery you have to add, like you do wages, do you capitalize, right? So that is installation cost, then wages for installation. All these you capitalize into your asset. Same logic applies, but only till the date it is complete. I mean, the moment it starts production or use, then you should not capitalize. You can charge it to P&L. Interest to financial institutions and interest on term loans with scheduled banks again is allowed, subject to provision of 43B. This is a simple section, but you have to read it a couple of times to remember, otherwise you forget. Similarly, discount and issue of zero coupon bonds to be allowed as deduction on pro rata basis. Discounts bonds are issued at a that means what will happen is you are getting money for a particular amount. When it is repaid back, it will be paid at a little higher amount. Therefore, the company is losing some amount. So that means when we say 100 rupee is a bond face value, it is issued at 95. Say, so suppose you are subscribing for that zero coupon bonds. What is going to happen is you can subscribe it for 95 rupees. You can subscribe it for 95 rupees. And when you subscribe for 95 rupees, at the end of the period, what you can do is you will get it for 100 rupees. Therefore, so for example, when you suppose the company is there, so the company is issuing this bond or whatever. Company is issuing the bond to you at 95 rupees. But at the end of the period, they are going to pay you 100. Therefore, 5 rupees is your benefit, but for the company, this is the cost. Now, suppose assuming that from the time of issue to this, there is 5 years. Therefore, this 5 rupees total cost for the company, they will divide in 5 years. That is what is the ultimate thing. The discount means the difference between the amount received or receivable by the infrastructure company, capital company or infrastructure capital or public sector issuing the bond, and the amount payable by each company or fund on maturity or redemption. So on maturity they are going to pay 100. What they received, amount received is 95. Therefore, the difference between that is discount, and the discount will be pro rata basis, will be divided till the life of such bond. That means in this case I told 5 years. Therefore, the total difference amount of 5 will be distributed in 5 years. Therefore, each year the company will take a hit of 1 rupee. Now, the next important thing is again superannuation fund. Employees' contribution to RPF or superannuation fund is allowed. Employees' contribution is allowed, provided section 43. Now, here I need to explain a little bit. Can you tell me what is the entry for salary? Maria, can you tell me what is the entry for salary? Suppose there is salary is 10,000. Here deducted from the employee is 1,000. What is the entry that you want to pass? Because that's you have to be very clear about this. A lot of students are not clear.
Journal entry.
Yeah, whatever. Yeah. What is the journal or whatever? That's what I'm asking. Salary, that is, listen carefully. All of you listen, I'm going to ask each of you. Salary paid is 10,000. In the sense, salary amount is 10,000. 1,000 has been deducted, he has been paid 9,000. 1,000 for what? It is the employee's contribution has been deducted. And he has been paid 9,000. So, what is the entry that you're going to pass?
So salary is account debit to bank to
How much? Salary account debit how much?
10,000.
10,000, very good.
To bank 9,000.
9,000.
And to PF or RPF
employees
1,000.
PF or PF. It doesn't matter. We can write PF also, or we can write 1,000. Employees PF 1,000. Now what happens is 1,000 is contributed by the employee. Now what the employer is supposed to do, he has to also do a matching contribution of 1,000 and pay it to the government on account of this person. Therefore, the next entry that the employer will pass is what, Venus? Can you tell me? Venus, there is Venus.
Yes, sir.
Yeah, tell me. Don't sleep off. No, morning time it's very difficult. So tell me what entry. That means this is the amount first from the entry. Now employer is also contributing an equal amount and paying to the PF department. What entry will be passed by the employer? We are talking of employer only. 1,000 rupees collected from him, plus he is contributing his share. What is the entry he is going to pass? And he is going to pay to the PF department.
Contribution to PF debit to bank.
Yes. So what you need to do is you have to, that contribution you have to employer's contribution to PF debit 1,000. That is his share. And this is the liability he has created. He has to pay that. Employees, please, this is going to trouble you a lot if you don't understand now. Debit 1,000 to bank 2,000. This is the entry that he will pass. So what will happen in effect? This liability and this debit will get cancelled away. This just highlight so that you see. This is the liability he has created at the time of payment. Next, after a gap of some time, he has got some time to pay. He will, when he pays this and this will get knocked off. There will be nothing in his books. Credit, debit. But this will remain as an expenditure. This will be closed by transfer to P&L. What? Employer's contribution. This is employee's contribution. Please be clear. This is also employee's contribution. If you want, please write down in your notebook so that you are clear about it. This is entry number 1. This is entry number 2. Okay. Salary account debit 10,000 with the value to bank 9,000. To employees PF 1,000. Then next entry is employees contribution to PF debit 1,000. Employees contribution to PF 1,000 to bank 2,000. So what happens? This employees contribution and this gets cancelled. Therefore, there will be nothing. Only what will remain is this employees contribution to PF. That is an expenditure that will be closed by transfer to P&L. So in the P&L, what comes in the P&L? Employees contribution or employees contribution? Aparna, which one will come in the P&L? Employees contribution to PF or employees contribution to PF in the P&L?
Expense employee contribution.
കേൾക്കുന്നില്ല ക്ലിയർ ആയിട്ട് പറ.
Employees contribution.
Employees or employers?
Employees.
ഞാൻ പറഞ്ഞത് Venus, which one will come? Maria, which one will come?
Employers.
Employer only will come. You're not listening. Please listen carefully. See, look here. Employees contribution. This is employee. Again, I'm saying this is employee. അത് liability ആയിട്ട് വന്നു. ആ liability ഇവിടെ pay ചെയ്തു കഴിഞ്ഞു. So this is getting knocked off. This will not remain in the books. It will be nil. But whereas employer's contribution will remain. Employer's contribution to PF debit 1,000 will remain. Look at the ledger account. Employees contribution by salaries 1,000 liability വന്നു first entry. പിന്നെ ഇത് pay ചെയ്യുമ്പോൾ 1,000 is gone. So this is over. There is nothing. Whereas employees contribution employer, what is going to happen? To bank this entry. So this is the employees contribution. This is getting debited. This is employee here debit. To bank 1,000. This will remain. That will be closed by transfer to P&L 1,000. So in the P&L, what is going to come? Only employer's contribution. Be clear about it, because if you're not clear, it's going to be trouble, because what I'm going to say now is very critical. So can I erase this? Can I erase this? You want you write down and tell me, then I will erase it. Because I just need to explain now next. Please let me know once you have finished. Can I erase it?
Yes, sir.
Maria?
Yes, sir. Yes, sir.
Done? Parna, have you done?
Yes, sir.
If you still don't understand, again ask me, I'll tell you because it's very important. Now, as I told you, in the P&L account, to employer's contribution will come as 1,000. Now, if it is not paid as per 43B, what is 43B will come to very simple. If it is actually paid, there is no problem. 43B means that if you have provided as on March, not still paid, if it is not paid before the due date of filing the return, then it will not be allowed as expenditure. Therefore, this amount will be disallowed because this amount has come. Therefore, your profit is lower to that extent. Now they are saying this lower profit is okay, but you should have paid it before the due date of filing the return. If you have not paid, this will be added back again. So your profit will go up again. That is the penalty. If you don't pay it before the due date. Now the problem that arises is, sir, that is fine, but what about this? That is employees gratuity also same. There is some receipt from employee towards certain welfare schemes, you know, to their account. Welfare scheme, anything like this employee's contribution of PF is not controlled by 3614. It is controlled by 5A. Now, why that problem? What is the problem here? As we saw, what came in the P&L account as debit is only employer's contribution, 1,000 employer. Employed വന്നതേ ഇല്ല. അപ്പോൾ ഞാൻ എങ്ങനെ? How will I disallow it? How can I disallow it when it's not come? Therefore, what they have told is, in order to avoid that situation, how they have changed, how they have done, I will just see how interesting it is. They are saying the moment you do the first entry, that means you deduct it, that means you pass the entry, salary account, debit 10,000 to employees contribution 1,000 to bank 9,000. The moment you pass this and take it as a liability, it takes the character of income. That when the P&L account immediately employees contribution is like income. Is like income. And it will be allowed. So mind you, it is not your money. It is the employee's money. This is a business person. Now, here there is time. Even if you don't pay till the due date of filing the return is time. But here they are saying you want this is come as income. Now, if you want deduction, you should have paid this as should have paid before the due date of the respective act, which is for each month 15th of the next month. So here I'm saying sums deducted from salary as contribution to a welfare scheme treated under section 224 as income. That is this section 224. If not actually paid on or before the due date under the respective scheme, it will be disallowed. So it will be allowed as deduction if it is paid before the due date of the particular act. Not 43B. 43B you got time till due date of filing the return. So let us look at an example where a live case, for example, in the month of say generally March, say, March he has provided the amount, both employees contribution 1000 and employees contribution say 5000. Let us keep a different figure. Now, as far as employees contribution is concerned, is employer. This one there is no problem because he has got time. Here now let us look at an example. He has paid on 15/6/2020. This is March 2020 provision. 15/6/2020 both he has paid. This will be allowed as deduction, no problem. It will not be disallowed. It's already allowed as expenditure, it will not be disallowed. Whereas this one, employees contribution, first it will take the character of income. Then you have to check when was it paid. It was paid on 15/6/2020. What is the due date for payment as per the respective Act, PF Act? For March, it should be by 15th of April. Mind you, all these are important. If you are going to do articleship, this is critical. You have to understand it very well. 15th April is the due date. Therefore, when has it been paid? 15th June. Therefore, this will be not allowed as expenditure. This will take the character of income. That is what it's saying. Some deductor salary as his contribution towards welfare scheme treated as income under 224 if not actually paid on or before the due date under the respective act. Here due date was what? 15/4/2020. But when it was paid? 15/6/2020. Therefore, it is delayed. Whereas for employees' contribution, if it is provided, it can go up to, suppose he's not a tax audit coming under tax audit, then the due date is 31st July for filing the return, due date. So he has paid before that, so it will be allowed, no problem. But here it is more dangerous. And mind you, the income tax, so many cases where, lakhs and lakhs of additions have been made because of that. Again, there has been a lot of issues on this. Kerala State has, Kerala High Court has clearly given the verdict in favor of the department. It's a legal issue. Like I have paid it, still it is too harsh. That issue is there. So that has been raging. I don't know about Supreme Court whether it's been cleared up, but there is a problem. So be careful when you are doing audit. Be careful. This is nothing. Allows this is not much, but these two are very very important. Bad debt. Again, bad debt, very simple like the earlier one. The amount of bad debt as or part thereof which has been written off as irrecoverable of the assessee, written off in the books should be as a debit in the P&L account of the assessee. For the previous years shall be allowed as reduction if the following conditions are satisfied. Number one, the debt must be a proper debt in respect of business or profession. Debt must be of revenue nature and top, not capital. Debt must have been taken into account for computing the income of that year or an earlier year. That is, bad debt on account of sale will be allowed as reduction because sale has been treated as income. For money lending business, interest is not realizable. It will be allowed as treated as income. Such debt must be incidental to the business. Very important, incidental. Such debt must have been irrecoverable in the accounts of the assessee. All these conditions if satisfied, then you will get. Now there is one exception where you need not be income, especially in the case of money lending business. What they are saying is money is only the loan is given to somebody. Your income is what? Your interest. But in this case, even if the principal amount is lost, you can still treat it as bad debt. Therefore, in case of money lending business, the money which was lent, if not realized, can be treated as bad debt, although it's not part of income. For example, if Aparna is giving some money to Venus and Venus is paying interest, she's giving it as a loan. Interest, Aparna is getting the money as interest. That interest she's taking as income. Now, if Venus doesn't pay that interest, it can be taken as bad debt because that is taken as income. But if suppose tomorrow Venus doesn't repay the principal amount, the loan itself, still Aparna can take it as a bad debt, irrespective of whether she has taken it as income or not. That is the only exception here. Other cases it will not be. This is an exception, might be. Now, similarly, any advance given for purchase of material which is forfeited by the creditor cannot be treated as bad debt as it is not in the nature of income or it may be allowed as loss under section 28. So these are certain conditions which can be asked. Be careful, try to understand the section. Not complicated, but you have to know. They can ask theory also. What are the conditions required to claim an amount as bad debt for something to be qualified as bad debt? These rural branches and all, I'm leaving it. Next one is expenses on promoting family planning. It's very simple. Disallowance deduction is allowed to company assessors only. It will be allowed in the year in which it has been incurred. Now, when such expenditure or part thereof is capital in nature, revenue means no problem. Then 1/5 each year. So it means 1/5 which 5 years you will get it. The way their language is confusing. First year you will get 1/5. After that 4 equal installments of. So it's basically 1/5. Now, where the profits of the business are not sufficient to absorb 1/5 of the capital expenditure, the balance shall be treated as unabsorbed expenditure of family planning, and treatment shall be same as unabsorbed. This will come to that later when we do the set off and carry forward. Now, these things are not very relevant now. These are not at the moment there, so you can ignore it for the time being. These are earlier sections. It may come as an expenditure, but it's allowed. So we got 10 minutes now. Let us see how much. Yeah. Now the next one is, we have seen some sections. Now there is specific deductions is what we saw. Now there is something called general deduction. General deduction is like a residuary section. Residue. That is whatever is not going through. These are separate doors under section 36. If you are able to go there and not go through that, then you have got something called section 37 door. It's very generous. Because any expenditure that you incur, first you have to go and knock the door here. Okay, all these characteristics are fulfilled, then you can go through that door into the business head, satisfied as an expenditure. But if you don't satisfy, then you have to approach 37. What is 37? It's a residuary section. It's you can that means see, section 37 is a residuary section. Hence, this covers all the above items of business expenditure which are not coming under the specific provisions of section 30 to 36. What is it? If you want deduction of section, what are the things? Such expenditure should not have been covered under 30 to 36. Expenditure should not be of capital nature. Expenditure should have been incurred during the previous year. It should not be of personal nature. It should be only an expenditure for business. Sir, these all we know. What is the problem? Yes, we know, but you have to be careful because if you remember in some, that problem relating to single entry, there was relating to motor vehicles. One half of it was being Tarudatta, I think Tarudatta problem. Half of it was being used for personal purpose. But what happened when it came to depreciation also, it is required to be done, which most of you forget. So therefore, you have to be very careful that all these things you have to keep in mind and then only do it. Now, if you refer your material, there are a lot of other instances. This is a general thing, the way they are given characteristics of that expenditure to claim depreciation. They are not given this. But based on past decisions, there are lot of instances of expense that has been deductible under section. So if you read that list of items in your material, it will give you an indication of what type of expenses have qualified under this. Similarly, there are list of items which was not deductible under section. Both are there. So if you look at a material, it will be there. If you don't still get, I will send you the list. So that will give you an understanding of what to look for. Okay. Now, that is as far as general deduction. Now we go into the next is expenses specifically not allowed as deduction. Now this 40A thing I will come to a little later. Let me finish this 40A also I will come to a later. I'll come to this so that you can try a problem in the break. This is what very simple provision. This is saying that expenses of payment exceeding 10,000, where assessee incurs any expenditure in respect of which payment or aggregate payment made to a person in a day is the sum exceeding 10,000, otherwise than by account paid check or bank or account paid draft. 100% of such expenditure shall be allowed. Where an allowance has been made in the assessee or any previous year in respect of any liability incurred. So this is 3. This is actually 3A. Both are there here. So here try to understand. This is nothing. This any expenditure in the P&L account, including purchase, anything, rent, anything. If it the expenditure you are paying 10,000 and more, it should be by account payee check dash draft. If it is not so, then what happens? It will be not allowed as expenditure. You have to add back that expenditure. You have to add back. Therefore, your profit will go up. It's a big implication. This one. Now, sir, now what happens? Suppose this is a purchase for this profit loss account PL 2020. In that there was a purchase and this is not paid. Therefore, it is coming in sundry creditors. The credit sales, credit purchase. So this is remaining as by balance brought down in the next year. Last year it was, this year it was not paid. Now when I go to make the payment next year. So next year when it comes, P&L purchase is there. Now when you tell that the department is saying no, you're not paid, you'll say, but sir, this is not relating to this purchase. How can you disallow it? This purchase is in the last year. You didn't disallow. How can you disallow now? Now, in order to avoid a situation like that, this section has been included. Where an allowance has been made in the assessment year of any year in respect of any liability, that is year 1 here. This is year 1. For any expenditure and subsequently during the previous year, the SC makes the payment. That is in this year, next year 2. This year 2, he is making a payment. Shall be deemed to be the profits of the business of profession in the subsequent year if it is exceeds 10,000. So even though it doesn't relate to the P&L that is there, it relates to the previous purchase, yet this amount that has been paid beyond 10,000 will be deemed to be the income of year 2. That is what they are saying, nothing else. Because otherwise it will escape assessment. So therefore, mind you, even though this is purchases in this year, it is not paid, therefore there will be no disallowance in this year. As and when it is paid in the next year, because it's coming in the next year books of accounts, not in the current year. Therefore, next year books in this 100 is paid more than 10,000. Then what happens that if the government wants to do it, he will say, no, sir, this is not in purchase. How can it disallow? In order to not come to a situation, they're saying, even though it relates to this purchase of year 1, it will be deemed to be the expenditure of the current year and will be disallowed in white. That is what it's saying. Now, obviously, this is a very harsh section. Therefore, there are genuine situations where deduction is required, even though it is not falling under this. What are those payments to banks, including cooperative banks, LIC, etc., customs duty, LC, letter of credit, payment made by adjustments against any liability incurred by payee, including this thing. Payment for purchase of agriculture and forest produce, produce of animal husbandry, fish and fish produce, horticulture produce, payment made for products manufactured without power, and so on. So many things are available here. So these are the things that are available. Mind you, Venus, are you there?
Yes. Yes, sir.
You are near the Shakti Kulngara harbor, right?
Yes, sir.
Now, if you go there and tell somebody you are purchasing, fish, okay, and you say, no, 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 my sir has told 10,000 rupees more, I cannot give you cash. I will give you check only. What he is going to do? What will you do? Tell me.
He won't allow that.
He will take you and throw you in the water. Listen. So therefore, that is why all these things are given some exception. Yesterday also one person came and told, sir, there's a problem. What do I do? I'm getting money in check because I'm selling. I'm like an agent. I'm selling, giving it to somebody, but I'm buying from somebody who doesn't have a, he'll not even listen to me. So that type of issues will come. That I have told him a solution for that. But that is all practical situation. But then you need to understand the laws. So there are certain exceptions. One more important thing is here. One more is there. Where is that? Where is that? See, village or loan which is not served by bank, payment of gratuity, etc. If it is paid on a holiday, where the payment is required to be made on a day when the banks are closed on account of holiday. Now, mind you, this one all the business people know. Maria, Maria, are you there?
Yes, sir.
So, business people, even though you may not know 48.3, they know this provision very well. Where, sir, this day it was a holiday, I have showed the payment on this day. So, is there a problem? I have noted down these are the holidays, their bank is holiday, so that day I made the payment more than